Check. Yeah. Region Weekly, DePIN Nation. Break it down simple, demystify the system. Demystify DePIN, tap and tune in. Know it's online, yeah, the whole net moving. Bills get passed, yeah, we track that movement. Region space drop, alpha prove it. Macro talk, but we still stay winning. That'll go up when the crowd start listening. From the chain to the world we bridging. Deep in the connection, yeah, we building. Yeah. We don't chase hype, we decode systems. Congress floor, yeah, we read legislation. Bills get signed, market shift quick. Policy change, we already on it. CPIs, rate cuts pending. Fed chair talk, got the charts all bending. Infrastructure plays, long-term vision. Deep in those give real permission. Fiber lines run through the
that song goes so hard, bro.
It goes hard.
There's
we're like vibing out right here before we get into the DePIN connection.
I was like, we may have a longer countdown, man, so we get more of that song in there. How are you doing today, Tyler?
You know, I can't complain. The market is up and down, but the Seahawks are in the Super Bowl, and being from Seattle, I can't complain. All things are good.
You're loving that, man. I would be shocked if we end up seeing the Seahawks lose. Okay, knock on wood, but let's be real. Their defense is stout, bro. And Drake May. I mean, you look at New England's schedule this year. And being against Denver with their quarterback out. Like, not to say they're like frauds necessarily, but I think Seattle is pretty likely to come out on top of themselves.
I hope so. And we've got some redemption. Given our last appearance with the Patriots in the Super Bowl, we made some questionable decisions at the very end of the game.
That's right. That Marshawn play when they decided not to give him the ball.
Marshawn still laughs about it to this day, which is great. So, yeah, I don't know. We'll see. So if it doesn't go well, then everything is down bad. The markets, the Seahawks, it is what it is. But
yeah,
we can get into that.
Let's do it. Let's do it. I'm wearing my Make Something Everyday shirts.
I love it. I love it. I'm rocking an OG Helium sweatshirt. If you were around in kind of the early days, you might have gotten one of these from a giveaway. Not a giveaway. It was a package deal. It was like their hot cocoa. They sent you a cup with hot chocolate and a sweatshirt. So I'm rocking that. The OGs know.
If you have that shirt, you probably made 20,000 on your IoT hotspot.
There's a chance. There's a chance.
Crazy.
Can't confirm nor deny.
Crazy times, man. I would say DePIN has matured quite a bit since then.
Yes.
I think in this last year alone, we've seen a lot change. Huge inflection points hit. We'll talk about that and where we think things are headed. But what are your thoughts on the market currently?
Yeah, God, I mean, welcome to crypto, everybody. This is the craziness that is the volatility, and I have to say, nothing surprises me at this time. I think the thing that's been really interesting is that it feels as though the market has been quite stable, all things considered. I mean, obviously, we've had peaks and troughs and things have moved, but we haven't had these violent movements where you'll shed $30,000 in a few days in quite some time. So we did obviously have the pullback from 126, which felt a little tumultuous, but we hit like 105. We kind of peaked back up, and then it was a slow decline down. So these violent swings haven't felt like they've been part of the zeitgeist for a bit. But the reality is, historically over crypto's tenure, this is nothing new, and it's an opportunity. It can also be a great time to start losing a bunch of money, but it is what it is.
Yeah. So, I mean, I agree, except if you're watching the markets on Friday after that Warsh appointment. Oh my goodness, man. We saw just crazy sell-offs in the markets. And obviously that continued on, got all the way down to 60,000 on Bitcoin, which is kind of surprising, really. I'd say earlier in the market cycle, I would have thought we would have maybe hit like upper 60s, just because that's kind of been the trend. You dropped the all-time high from the last market cycle, and you find a lot of support there. And we cut through that, brother, and it was just cascaded. And we're kind of in unprecedented territory to an extent right now, because it's something we haven't seen.
Yeah.
So what are your thoughts? I mean, do you think we go lower?
I think there's a very good chance of going lower. It was when I was watching it, I was like, man, maybe 60 is an entry. But at the same time, when you see such violent downswings, it's hard to know where does it start bottoming out. And then we had quite a big rip back to 70, 72, whatever it was. And it's just hard to try to time it. You know, I don't feel like this was necessarily an over or under reaction. I think it's volatility going in the direction of the current trend, which is down. And, you know, you hear people calling, you know, 50,000 as the bottom. Some people are saying as low as 43,000 as the bottom. Maybe that happens. Maybe it doesn't. I know at least for my personal Bitcoin holdings, I'll be buying at some of those price points. I should have pulled the trigger at 60. I was in the middle of some things and didn't, but it doesn't feel like we've got the catalyst. You know, this is one of the things that we talked about specifically at the end of last year was really kind of our outlook for the year. And my general outlook was there's a couple catalysts that could start impacting price in a positive direction, which was going to be things like the Fed appointment and having, you know, flooding of capital into the market, and then potentially the market structure bill. All of these things in conjunction with one another should be the precipice for price action. That hasn't materialized. And so whether you saw this coming or whether you're kind of holding on to the sidelines to see what was going to happen, I think it's difficult to see or to say that there's going to be any strong catalyst for price action. I think in addition to that, one of the things that you and I have had a lot of conversations around is there are some potential black swan catalysts that could be coming with respect to these treasury companies, the DATs, the MicroStrategies of the world, getting to price points where they now become forced sellers. We're starting to enter that territory. I think I saw the other day that BitMine was down like $4 billion on their ETH holdings. And so
more, like 7 billion, I think.
Jesus. So, you know, you start seeing these things in conjunction with one another and you're like, well, the catalyst for the upside, I don't see those. And if anything, it looks like there's more and more catalysts for the downside. You've got record job losses. You've got low job openings. So I'm a little bit nervous for the 1 year, maybe 1.5 year time horizon. And then obviously the big elephant in the room is what's going on with the AI cycle too. So I don't know. It's not looking great, but I know that in the 5 to 10 year time horizon, at least from my perspective, I think these will be opportunities that'll pay themselves out in the long run.
I think that's very true. You know, for BitMine, I saw an interview with Tom Lee the other day. That guy's so funny. He's like, I think that we're going to see Bitcoin hit 130,000 by tomorrow. It's like, all right, bro. Like, we know this story. We've seen this movie before. But he did mention something that was very interesting, that their yield right now on their holdings. So they're getting, I think, 4%, something like that on their ETH holdings. And they also hold treasuries. He said that they're still making, just off their yield alone on their assets, like 700 million a year, which I thought was very interesting. Like, that's something that Saylor's not getting on Bitcoin. You know, some of these DATs that are holding some of these, you know, ETH and Solana can get yield that does change things a little bit, but there's a huge DAT overhang, you know, and I think the question will be, are some of the big DATs going to buy up, you know, be able to raise funding, whether that's through dilution or, you know, whatever debt? Will they buy up the smaller players to stop, you know, a major cascade and sell off and buy them at a discount to add to their balance sheets? And of course, then they're, you know, playing this game where they're betting that when the market recovers, while they are trading at a discount while the market's down, they're assuming they'll be able to trade at a increased MNAV, you know, above and beyond their underlying assets on the other way up. So I don't know if that's going to happen. Like, for me, I spent a lot of time at the end of the summer, into the fall, really researching these DATs, looking at their MNAVs, and I don't know why anyone would want to buy a DAT instead of just a spot ETF.
It doesn't make any sense to me. There's too much additional risk involved. You've got creative finance. You've got, you know, all of the kind of managerial or counterparty risk that gets thrown into the equation. Like, it's just, if I was looking at this from either a pension fund investment standpoint or even just someone that has a traditional investment account, like a retirement account, I don't know why you would look at a DAT over a spot ETF.
Especially if you can get a spot ETF that has like yield payouts on it. I mean,
right.
So I just don't get it. Like, I think their whole valuation.
They filled a need in the market when it was timely, but that time has changed. I think that's my personal opinion on it.
I agree with, if you don't have like the Ethereum DAT before the spot ETFs, were a big thing, like Solana DATs before the spot ETFs were approved, it was a way to get exposure through TradFi. But now that the spot ETFs are there, I just can't wrap my head around it. Unless you like really buy into the fact that if they have a talking head and their marketing and their ability to raise future money can allow them to trade at an MNAV that's above 1, but we haven't seen it. So I just don't get it. So I personally won't be buying any more DATs. I did back, in August, September, which hindsight would have been better just buying that Osprey spot ETF that tracks Solana's price a lot better up until end of September when we saw October 10th. Whew, man, still feeling the hangover from that too. Sure. I think it's funny because we've been talking about that for months, and now it seems like just 2 weeks ago, all of X decided that they hated CZ because of 1010. It's like, yeah, no shit.
Catch up.
Right? It's kind of funny, man. I mean, we are definitely in that anger phase. I don't know if I necessarily believe in that whole what phase are we in this market cycle, and the anger and capitulation and all that. I mean, market psychology is real, but I think we've just been in like anger for a long time, like looking at X. But what are your thoughts on DePIN right now, man? Like a lot of these, this is a good question. We can roll this into our discussion here. But what are your thoughts? What are your outlooks on DePIN, short term and longer term?
I think the market data's in, right? It's a great way to build a new type of network that obviously can accrue value. There's plenty of companies that are proving that out. I think the selling point now between the projects that are going to really succeed and the ones that end up ultimately flopping are going to be the ones that had the foresight, if you will, to be able to prevent all of the token overhang with just massive distributions and unlocks that have unfortunately made it very, very difficult for price appreciation to continue. It's funny. I was listening to a podcast last night, and it was a bunch of private equity folks that were just kind of shooting the shit and talking about what they're doing. And one of the guys, he just used the most elementary example, and he said it's the first thing that you're taught in economics, which is if there's 10 people that want one banana, you're supply constrained and people want to buy the banana, that you're gonna make a profit as a business. If you have one person that's trying to buy 5 bananas, then you're gonna have to sell those at a loss. And it's fundamentally no different when you're talking about DePIN tokens. The thing that's a little bit difficult, I think, in it's easy to say in retrospect, it was maybe a harder thing to foresee, which is there's obviously been this major value to price dislocation in crypto generally. And so oftentimes my assumption is projects think about this and they try to be intentional, but the reality is you can get it somewhat okay, and the market just puts these massive valuations on it. And so it works itself out. But the other thing is that when you've got this kind of hybrid asset that functions as both value accrual or an instrument for value accrual, it's also kind of this unit for exchange or medium of exchange. You have to think about these things a little bit differently, but ultimately the fundamental economic primitives don't disappear in this case. And so it's easy to think these are no cost assets that you can just print into infinity. But at the end of the day, the market has clearly not valued that the way that maybe some folks thought. So I think that I think it's a wake-up call, because if you're looking at this, clearly it's a really great model for being able to democratize and sort of create this flywheel on creating these infrastructure networks. But the intentionality on the tokenomics has to be there. And if it isn't, you're just playing a fool's game, and the price action on virtually every token in the space reflects it. So, Yep.
I agree, man. I mean, I think it's just part of the maturation process of DePIN. Unfortunately, I've seen a lot of people say like, Helium stepped on all the landmines for us. And I think there's a lot of truth to that.
Yeah.
But, versus proving out that the token incentive model can get supply built out and get participation. Then it was, okay, can we get revenue? Now it's like, okay, how do we connect the token price to the fundamentals? And we're seeing some do better than others. And unfortunately, for some of these projects that, Helium, and I think you can throw HiveMapper in there as well, honestly, they've done a good job of executing on a business front. The tokenomics are really making it hard for the
Yeah.
token to appreciate. And all that is that overhang from early unlocks, from early dilution. And, especially in like Helium's case, we talked about this, when you have years of dilution before you find product market fit and turn on real revenue, it's not like, oh, we found product market fit, now the token's just going to appreciate like crazy. I think you have to work your way through those years of dilution before you start to see an inflection point. And that's kind of my sentiment around it. We saw the token price start to get a little bit better supported, and I actually bought Helium H&T back when they made the announcement that they were going to take all the Hive Map or Helium Mobile, revenue, and buy.
Wouldn't that be something? They took the Hive Map revenue and bought HNT.
Yeah, well, Honey needs that revenue, I'll tell you, if you look at the chart. So when he said that, when they all of a sudden doubled the open market buys and burns, I was like, okay. Like for me, it was a mathematical thing, and it was a sentiment thing. So on one end, you have double the open market buys and burns and buy pressure. I mean, that's obviously just math based. And then, when you have that happening, you have a change in sentiment where people aren't, maybe going to sell as much. Maybe they have optimism to hold the token. So I think we saw that, the immediate aftermath of that decision was a token appreciation. We saw it go from $1.70 up to like $2.40. And then of course, October 10th happened and we started seeing the market really bleed out. And then when they made the announcement on January 2nd, they're ending that. It really, in hindsight, would have been a great short opportunity. It was weird as the market rallied for like a day. I don't think people quite understood what was going on with that decision. And then it just has been kind of bleeding out ever since. Now, I'm not saying that it was the wrong decision, but I am going to say the communication was very poor, and they could have done it a lot better, because I think there's a lot of misinterpretations of the announcement, and I think that could have been handled a lot better. And then we'll see.
I think there was sort of misinterpretations all the way around too, because I was the amount of people who didn't. And this isn't like I'm saying you're not smart or anything like that, but just the amount of people who didn't know that there was a difference between the protocol revenue and the Helium Mobile revenue as sort of a secondary business was pretty enlightening in the way that they had been communicating it, because clearly I would say the vast majority of people didn't recognize that there was a difference there. And then secondarily to that, the way that they communicated it on we're taking the Helium Mobile revenue buy and burn piece away, created this so now you're just taking away all open market buys and burns. And so both, I think, on the front and the back end, there might have been some room for improvement on the PR side.
For sure. So the question is, from where is right here, when do you think some of these DePINs that became deflationary start to really move opposite to the market on these dumps? So what are your thoughts on that?
That's a good question. And it's super project dependent, obviously, because it's related to their emission cycle. It's related to how much tokens they're pulling out. I will say that I don't think that it's solely deflationary, because it does require this equilibrium or quasi-equilibrium on the buy and sell side of the market, in addition to being deflationary.
Mm-hmm.
Initially it was like, oh, the only thing that matters is the token overhang and the price will solve itself out in an efficient market. Well, these markets aren't very efficient. And so as a result of that, you both need equilibrium at the buy sell threshold. And then you also need the equilibrium or sort of the benefit, I guess, from the deflationary piece. And so that's going to be a function of the emission cycle and revenue. I think the only one that right now looks promising on that front is going to be GeoNet, just given the way that they've both handled the upfront emissions, the halvening, all of these other things related to token supply, and then how fast they're growing with their revenue. They look like the one that's going to be able to showcase how that price disconnect can happen. Unfortunately, though, I don't see a lot of other projects that are even remotely close to that turning point or are going to hit it at all. And so I think one that gets me excited is 375 AI, but I think they could do it quite quickly given the prospects for the revenue growth. But they're still in kind of the early phases of that. So I think that's another one on the short list of projects that will get there. But the one that's actually closest to doing it is going to be GeoNet. And outside of those names, I'm struggling to find projects that are going to be in that category.
I agree. I was thinking about like a concept on this with Helium. You think about like from day one, because they're just deleting tokens and they don't have that buying revenue, the buying pressure from revenue. It's kind of like just being in a boat and just water, just filling your boat up. And over time, it's getting to the point where it's almost sinking. And then finally the revenue gets to the point where like you've stopped the pain, where the you're no longer leaking, but you still have this water in the boat. Now, when you go deflationary, you're starting to remove a little bit of water, but you have to get all that sell pressure from the early dilution out of the way. And hopefully the people that are buying from the sellers are long-term minded people and not just trying to trade it, but it's gonna be an uphill battle. So for those projects, it's good that they're getting to a point where they're profitable, because that means that they have runway. If they can make more money than their burn rate, that's great. You don't have to worry about them going under. But I think, you just have to be really, really patient it's going to take a lot of time. When you have years of dilution, it's going to take potentially years to work through all that sell pressure. Not to say you won't see appreciation along the way, but, to get to that inflection point where you really start to see that flywheel effect take off and for things to normalize, I think it's going to be a while. And the other thing to consider too is as the token depreciates, right, you're burning less tokens, so that deflationary aspect starts to go away after the token appreciates to a certain point. So
that right there, Brad, is one of the big challenges with kind of the generally accepted best practices for DePIN tokenomics, which is twofold. Number one, just because you've hit net deflationary doesn't mean that you have net upward pressure from buys that are going into the market. As a matter of fact, through a lot of the modeling that I've been doing when I was working on kind of this token valuation framework was that you could see, even at the point of a network becoming deflationary, up to 7 to 10 years, depending on the revenue growth, before you actually see price appreciation, because you have to have enough tokens removed from supply where the only thing that you're able to actually to the point where you can actually get enough net buy pressure that starts moving it in an upward direction. So that's difficult. But the other thing that you talked about, which is a really good point, is as you have price appreciation, you're able to burn less out of the supply. And so both of those things create this kind of contentious forward-looking model, because you're always trying to reprice the token asset to see what is going to be removed. And so if your assumption is like, all right, we need 40% of the current supply to be removed to actually have a net buy pressure that does increase price, what does that look like as the price increases along the way? Does that move the time horizon out? And so if you have kind of a partial differential equation style model where you're constantly doing a repricing, you can see that timeline stretch out for many, many, many years, more so than probably the average retail style investor is going to want to hold their tokens for. And so that makes it really hard. Super Scotty just said something great too, which is not to mention entry and harbor depreciation. That's a really good point, because you're thinking about, if you think about these things in a fixed point of time, maybe you're able to get the average life is like 3 or 5 years. But if you have to start incentivizing additional harbor types, and maybe you have to create, increased emissions or whatever that is, like that does start to complicate this equation a little bit.
Certainly. And of course, the other side of that equation though is if you're on a really nice growth trajectory on revenue, you can offset, that I think that's the whole goal, right? If you increase the revenue, then you can offset the fact that, your token burns are decreasing as the price appreciates. But, what we're seeing with some of the growth trajectory on some of these projects has been remarkable. I mean, GeoNet went from 500,000 ARR to 8 million by the end of 16x by the end of last year. But it becomes harder and harder to grow at that rate. I think this year they're looking to go from 8 to like 20 million. So going from a 16x to maybe a 2.5x, somewhere in that range. So it's hard to continue on those growth trajectories. The one I would say that might be different is 375 AI. I think that we could see a pretty ridiculous growth trajectory for them with the data they're selling. And we can talk more about that, but just the type of data they're collecting, the more data they have, the more historical data they have. And once they're in with these customers, I think the amount of growth potential there with their contracts with those customers, I think is huge. And that's why, for me, it's like the most no-brainer investment other than the weird stuff that's happening with the sell-offs. So we'll talk about that too. But anyway, awesome. Don't forget to like, guys. Free Skrelly in the house. What's up, sir?
Free Skrelly.
What's up? Oh, by the way, that song we entered in with, yes, that was a banger. It was a banger. Give this guy a follow, y'all. Let me share my screen. He's the one that made it. He made the song for the show, for the Demystifying DePIN show that we do on Thursdays. But I was like, man, this song goes hard for DePIN, so we're just gonna play it. So follow this guy. Pretty awesome stuff there.
I'm play it in my car when I'm driving late.
Right. Oh Lord. I want to pivot for a second, and then we'll come back to 375 AI. But what are your thoughts on this Fed chair situation, man? With Judy rising the ranks in the betting markets, man, it's crazy.
It is crazy. You'd probably be the better one to shed some light on that. I haven't been tracking it as closely.
So let me pull this up real quick. The betting odds. So you guys remember, just for some background here, Thursday. It's just last Thursday. This year feels like it's been like 10 years already.
Oh my God.
That was just last Thursday night that the rumors came out that Kevin Warsh was going to be appointed. And then you remember Fridays when we saw the precious metals sell off, we saw all the market sell offs because everyone looks at him as being mostly a hawk. But all of a sudden, the prediction markets aren't closed yet because while Trump did announce this via X, he has to officially submit it to the Senate. And that hasn't happened yet. And we're seeing a lot of volume come in on Judy Shelton is rising up from like less than 1% up to 5% now. And there's a lot of people that think he's going to walk back his decision on Warsh and end up nominating Judy Shelton. Pretty wild, man. And
didn't you put a bet on her? Or did you put a bet on someone else?
I put a bet. I put a very small bet on her, and I put a larger bet on Waller. And I put a no bet on Warsh. So I'm hoping that he walks it back because I would actually have a really nice payout. I thought it was over when he came out Friday. And I was just trying to make sense of it because we talked about this quite a bit. Warsh was like the last person we wanted. And obviously, I think the markets have shown that was a warranted opinion. So I'm trying to think here. I'm not going to put more money on Judy. I think it's very, when I put some on her, it was like 2%. It was like a 2% chance before Trump came out and announced Warsh. That said, I'm not trying to put more money. I think it's very unlikely, but I am trying to prepare here for if that announcement's made, how to potentially open up some long positions because, if she's looked at as a dove compared to Warsh, as soon as that announcement's made, I think we could see crypto rally. I also think we could see gold and silver rally again because that kind of squashed that whole run on precious metals when Warsh was announced because his whole concept is reining in spending, strengthening the DXY, and kind of eliminating that trade away from the U.S. dollar into precious metals. If all of a sudden we get somebody announced that the market feels is going to be more likely to print money, I think that's a trade that you can take. And so I haven't done a ton of research on Judy Shelton. That's going to be something that I do over the next day or two and just prepare, know where my key levels are, like that I'm looking at for breakouts on Bitcoin, Ethereum, gold, silver, in particular, like the majors, and just, prepare for if that decision's made, where I would want to enter my positions. Because I think there could be a major opportunity there. I still think it's unlikely to happen, but I do think there's a lot of money to be made if it does happen.
Do you know what the average time is between a president announcing who the Fed chair is going to be and sending it to the Senate generally is? Like, is it a day? Is it a week? What's the normal timeline there?
So
I think it's abnormal.
I think this is actually abnormal. So there's one situation with Obama and Ben Bernanke where they were on recess, like summer recess. So it was maybe a 2-week wait. So that was the only time that it's been delayed like this that I could find historically. But it's a really good question. I was listening to a podcast about this actually, and that was something they talked about, and how this is more delayed than normal. So it makes you wonder, because also Kevin Warsh hasn't made a single statement since Trump came out and announced him. We haven't seen anything from him. Judy Shelton's been everywhere. She's been there with Scott Bessent, like in the spotlight. It's kind of strange.
It's super. The one thing, regardless of your opinion on Trump, it's hard to tell if he's playing checkers or 4D chess sometimes, because sometimes things just happen and line up in ways you're like, did you mean for this to happen? Or did you just get really lucky and it was happenstance and all this stuff? But
100%.
Sometimes he does these things where it's very atypical, and he does what seems to be off the wall shit to try to help inform decisions. I don't know. Like, I really can never try to, kind of like Bitcoin price, I try never to put myself into the what is Trump thinking from a logic perspective, because whatever I seem to think is the case, he'll go off in 7 different directions with it. So
for sure,
I'm never surprised anymore. Let's put it that way.
I agree, man. I agree. I wonder who else. So we still got all our guys in there. My boy Wallers looks like he's out, but man, yeah, I agree. You never know. And really, it would be kind of genius. They wanted to stop the run on gold and silver. For one, there is a lot of rumors going around that some of our big banks had some short exposure to silver and we're about to get wrecked. So I think they wanted to push price down for that. But also, I think globally, a lot of people are freaking out in trying, seeing the gold and silver prices go up the way they were. I think it was a lot of people took it as a sign that people are losing faith in the dollar as a global reserve currency. So announcing Warsh was a good way to put a stop to that rally. That's exactly what we saw.
Right.
So if that was his move, and then try, gauge how the markets react to Warsh, I think he has his answer, and he maybe killed 2 birds with 1 stone there. We'll see. We'll see what happens, but it'll be fun to watch. But that's something that the next day or two, I want to do a lot of research on Judy Shelton, because that was a generational opportunity to short gold and silver on that Warsh announcement. In hindsight, I was thinking about it more like, what's going to do to crypto? I sent out that tweet Thursday night, like, rip to your crypto bags if he's appointed. And obviously that's exactly what we saw.
Yeah.
I wasn't thinking about other markets. And so now I'm trying to make sure that I can not only take advantage in the crypto markets, but also in other markets with these types of events. And this would certainly be one that would, I think, give us a really good opportunity to long markets. If it happens, we will see though.
Yeah.
Yeah.
I don't know. I don't know much about our policies, but I do have concerns on at least the 6 to 12 month time frame for price impact related to Warsh as the appointed Fed chair. So
agreed.
I'm optimistic if that ends up being the case.
Let's hope, man. Let's hope. Let's talk a little bit about 375 AI. I covered it on the live stream last night, but I know we both have sizable positions in it. The price action has been a little bit frustrating, to say the least. So curious what your thoughts are on 375 AI, the outlook, what's your time frame, your time horizon, etc.
Yeah. So there's clearly some thing going on with respect to trading, and the price is clearly being impacted inorganically from something. But I think that they are currently positioned to be one of the most successful DePIN projects, maybe even crypto projects. If you look at both the founder class and you look at kind of the market that they're going after, and I think the novelty of their solution in terms of how they're really going to penetrate the market. So I would not be surprised if we see them trading in the multi-$100 million market cap or even beyond that in the next few years. So I haven't touched my position, although it's been hard seeing the almost 80% drawdown, even maybe more so from the peak. And it's about 80%. but I'm still holding on, and I don't have any plans on changing that until we start seeing the value materialize. But the reality is that you've got a you've got a sales cycle that's going to be a little bit longer, right? They're selling data. You have to have enough of it to be able to start monetizing it. The thing that's really great though about the team is they've done this before. This is not their first rodeo. Harry's had multiple 9-figure businesses in the data space, specifically being able to sell both to customers and then eventually exit the business. And so having an exitable business, I think, just goes to show their quality. So I don't have any concerns. I think that there's certainly some short-term price action deficiencies, which is frustrating. I've stopped adding to my position at the moment just because there is something going on, and it has nothing to do with the team or anything else like that. But there's just a little bit of abnormalities, and so I don't know how low that could theoretically go. I'll probably start buying again if it dips back down to like the 10-cent range or the 0.01, whatever it is. I have to move the decimal on some of these prices because otherwise it's just so hard to explain. But over the next 3 or so years, I really think that could be, given where it's at, I think that could be a 7-figure trade if you size correctly. Brad, you're muted, by the way.
I 100% agree. And here's what we're talking about, by the way. We saw a big buyer step in on Bybit yesterday. I mean, we saw 160% rally in EAT, but we've since seen it drain back down again. If you look at the volume, this was an abnormality. We don't normally see this type of volume on Bybit. So that's where I think, we saw that big buyer step in. This has been the issue. Over $600,000 a day. And generally that's about 75% of the total volume is happening on that exchange. There's a spread of 3.56%. And I think the main reason here is that it's pretty illiquid. This Bitmart listing, if you look at a liquidity score of 1, what seems to be happening here from the research I've done, and Decrypto Way also helped me find some stuff on chain. Shout out to you, buddy. It seems that somebody's going on a Bitmart, buying there, hitting that spread where it's low, there's low liquidity, and then sending their positions out to an external wallet and selling on the DEX to take advantage of that spread. That's what seems to be happening based on my research. We don't know that for a fact, but I believe that's what's taking place. And that's why we're seeing the price just kind of bleed down, because they're taking advantage of that spread on Bitmart. I don't know what the solution is there. I don't know how you get your token delisted from an exchange, because I as far as I know, and what Quest, who works for 375 AI, said on Thursday, is that they don't have a relationship with them. So I don't know how you can get something delisted, but maybe the other option is to get in contact with them to improve their liquidity, to reduce that spread, because that's what's incentivizing whoever's doing this to do it. I think there you can stop the bleeding. And to me, I'm watching this very closely. If all of a sudden we see liquidity improve there, or it gets delisted, I think that's a massive buy opportunity if you can stop that bleeding, right? And you can take advantage of it. But to me, it's a short-term problem. I don't see this being a long-term problem. So I think, to your point, like not adding right now because that leak is still there. But once that loop is closed, man, I think we're off to the races.
Yeah. And this is the thing that, it's always got to be your own personal decision. I've historically been a bit adverse to trying to trade these ups and downs, because net just holding long term seems to have always been the better play, at least for me. Maybe it's because I'm a shitty trader, but that is what it is. And so, it makes it a little bit more difficult to want to try to time these things. I do think that you could make a fairly strong argument that in the case where there's some arbitrage opportunity that's going to impact things, that until that gets solved, you could make the decision of maybe I'll, rebuy at a lower price point so you can increase your, your net holdings. But I don't know. For me, I just haven't done anything. I've just been letting it sit there and watch it go up and watch it go down. And it is what it is. I know I've got long-term aspirations for this position. And so I don't want to try to shoot myself in the foot where, all of a sudden I'm selling and waiting for reentry, and then this does get solved and you see the price rip back up. Yeah. And then you're like, well, I just lost out on my position. Now I'm 50% under what I would have been, or whatever it is. And I have had that happen historically. So I'm trying to prevent that in the past. But I do think these are different situations, or sort of a different scenario where you could justify that logic if you're looking at it from that point of view. So I certainly wouldn't fault anybody for it. But there's there's just clearly something going on. And to your point about what does it look like to delist or try to improve liquidity, if you don't have a relationship there, that could take a few cycles before it could actually, not market cycles, but that could take a couple weeks if it ever gets solved. It's just hard to say with some of these centralized exchange partners, because some are better than others. Some do questionable things. Obviously, there's no surprise there, so it's just hard to know. But someone's taking advantage. By the way, if you don't do this, if you're seeing the stream and you're like, oh, I can make through, it's just, it's unfortunately it creates externalities for everybody else, negative externalities for everybody else. And so this can hurt their ability to raise. This can hurt their ability to attract investors. Like, if you have long-term aspirations for this, it's not worth a 3% spread to try to make a little bit of money here and there. So just a fair warning for any astute listeners that think they found an infinite money glitch here.
Yeah. I just hope they close the loop, and then whoever's doing this, like, screw them, man. That's pretty shitty. But looking at the market cap, 3.89 million. They have a pretty fair unlock schedule. It's going to be another nearly 4 years before their investors and team are fully unlocked. So just doing some back of the napkin math here. You talk about if we do at some point, not guaranteed by any means, but let's say we do get $1 billion market cap, even with that dilution, let's say it's 2-3 years down the road and we're at 12 million, 10 to 12 million with unlocks. You're talking about 100x potentially, here looking longer term. I don't think that's out of the realm of possibilities. It's not my base case, but the main thing for me is I'm looking for asymmetric investment opportunities. I'm looking at which projects have red flags. All of them have red flags. To me, the only red flag right now is something that's out of their control, this Bitmart situation. Yeah. But they check off all of their boxes. And from a $3.89 million market cap, another day when we got down to 0.008, sorry, an extra decimal in there, we were down below 2 million. And that's insane. Like those are the asymmetric opportunities that you don't find unless we're in these types of market conditions. And I think a lot of people are very unaware of this project. So, man, I'm right there with you. But I've stopped adding just because of what we saw. The last 24 hours is a great example of this. We saw somebody come in, buy a huge position, it moved the price up, and now we just see it bleeding out again. I think it's largely because of this, whatever's happening with Bitmart. So keeping a close eye on it. And I do have, I have a sizable position and I want to keep adding to it just because I think it's going to be one of the better investments in this space, and comparable to some of the best ones I've had. So that's my thought.
I'm right there with you. I think if you're looking at some of these projects led by people who have been in the industry for a long time and that have shown their ability to execute both in the Web 2 realm and also the DePIN realm, like notably GeoNet, I think that kind of translation into the 375 scenario is a very good parallel to draw, right? The guys, what Mike has done with RTK and kind of this spatial, the GPS and everything else is really what Harry and team have done around data businesses before. And the thing that I really love about them is twofold. Number one, when you've had a few 9-figure exits, you don't need to be working, but they are grinding like this. This is their first startup. And I feel like I've heard them say directly or indirectly a few times that this is, they think this is going to be bigger than anything they've ever done historically. And so when you have that caliber founder, someone that's done it, someone that thinks it's going to be bigger than anything else they've done historically, that's in my opinion, not financial advice, but that feels like a really safe bet to make.
I agree. And even like Rob, and it's not just Harry's, obviously, we talk about him a lot, but their whole team they've constructed. I mean, it's like
100%.
All of Harry's best colleagues that he's worked with throughout the years that he's constructed into this team. And Rob, even in an interview recently, was talking about how startups are a young man's game, but I couldn't turn down this opportunity.
Right.
It's like, damn. And talking about the red flags that they don't have versus other projects out there. One of the big things you find with DePIN projects in particular is that the market conditions can really make it difficult to keep your supply consistent. In other words, participation, if you're building on a network, these, their main products, and obviously their app will probably have some ties to that, the activity on their app, but the main meat and potatoes of their revenue drivers are from these cameras they're putting on billboards. The CapEx up front, but they don't have to worry about fickle, people in the DePIN community that are like, the price is down now, I don't want to participate. These cameras are going to be out there passively collecting, and over time that data set is going to be more and more valuable. And you look at some of the entities they're going to be selling these to: civic, state, and local governments. I think about Amber Alerts, autonomous vehicle companies obviously need the data to train their autonomous vehicle models. And that's about to be massive. That's going to be like the first ChatGPT moment, the aha moment for robotics, in my opinion.
Yeah.
Freight and logistics. There's a reason why they're putting on these cameras near ports. Quant traders, they are data hungry, looking to feed their algorithms. And advertising agencies and media companies, they're putting these on billboards. Obviously, the billboards are in that spot for a reason, because they have eyeballs, right? They're in high traffic areas. They'll be able to gain insights for these advertising agencies and media companies for what type of traffic's going past. And there's just the total addressable market, I think it's just so much larger than we can even comprehend.
Yeah.
I could see a one contract with a customer, because they, with the team they've constructed, they can get in with Fortune 50 companies. A contract with one of those entities would be a drop in the bucket and could exceed any of the revenue we see with any other DePIN projects at this point.
Yeah, 100%. 100%. I think you said two things that I think are really interesting, and part of maybe the challenge a little bit is that number one is it's hard for a lot of people to necessarily understand kind of the market that they're going after, because it doesn't intersect with your day-to-day life and in any capacity. And people know intuitively, companies like Facebook, Google, obviously their data business is first, but it's one of those things where you don't, like, what's the value of that really look like? Okay, I can see how much money Facebook makes per person, or how much money Google makes per person, but it doesn't intersect with you like maybe a decentralized wireless play does, where you're like, okay, I know the pain point of not having connectivity somewhere. But the other thing that for me that makes this a really compelling use case is the fact that they don't. One of the reports that we put out was kind of this DePIN discount rate, which was specifically looking at the risk factors that impact DePIN companies. And this isn't true of just DePIN companies, this is true of anybody, but it's like, what does the centralization risk on the customer side look like? If you're looking at a company that's interfacing with telecom, you've got 3 major players in the United States that you have to go try and sell to. And if you don't sell to them, you're sort of out of luck. In their case, they've got an entire world of opportunities with, multi hundreds of millions of dollars of spend in some cases, that doesn't create this, if we get a no from one customer, there goes half of the TAM. Mm-hmm. And so I love that from a risk standpoint. Obviously it creates the need for additional sales channels and being able to go and actually get these companies to sign up, but it doesn't take a lot of yeses to have success. And because there's so many companies that are willing or wanting to buy this kind of data, it makes the market opportunity really significant. And when you've got a team that's been able to go and actually sell to those with a better product offering than what exists out in the market, it's just, for me, it's hard to say this can't be successful or won't be successful. So I agree. I think, the name 375 AI maybe can create a knowledge gap, or what they're doing, just because it's not necessarily relatable. But once you do a bit of research and you see what's happening, both in terms of the gap in the market and then also how this is better than what currently exists, it just feels like such a no-brainer.
Yeah, I 100% agree. And like the EAT token too. I think some of people could maybe misconstrue that as being like a meme coin or something. They don't understand what this project is. But the other thing I'll say is that they have a simple business in the sense that, I mean, you look at some of these other projects, even like GeoNet. Like GeoNet's arguably the most successful DePIN, but they still have to worry about market conditions. Like, station operators, if the market's down and they're just like, not super happy with the rewards at some point, to get them to go out and make sure to troubleshoot if their station's down, that's a potential threat. They don't have to worry about that with 375 AI, and I'll say the same thing with Aoki. Aoki's freaking crushing it, but to get their Cactus product, they have to make sure that these locations are, onboarding their network and training employees to use it. And it's just it's a more complicated rollout. I think I love Aoki. I have a position and I think they're going to do quite well. But, with 375 AI, there's something to be said about it's a simple business, but they also have a moat.
Yeah.
And that's a unique combination where, because most simple businesses, you have to worry about threats, and you want to have a higher barrier to entry. Their moat is that they're the only ones that have this data set. So they don't have to worry about someone coming in and being really a major competitor. So I think they're kind of in this unique position. And it's not surprising given the team that is constructed here that they thought to do this. But to me, it's one of those things where these data collection points, that data set is going to only get more valuable over time. And I've been seeing more and more people talk about, with AI emerging, if your whole product is just digital, that can be a major problem for you. But if you start to consider real world data collection like this, you can't synthesize that.
Yeah.
And it's not a threat, from AI, because this physical data collection they literally have the only one that exists. Okay. Like there are other companies that have cameras out there, but not in their specific locations. And they, of course, have 6 cameras on every billboard with NVIDIA chips to process everything at the edge in real time. So to me, I just think, they have all the aspects. And I think a lot of the red flags that exist with maybe some other projects don't exist here. And they check off all the boxes, man. And the current prices, because of the market conditions, to me, I feel like I'm just convincing myself like I need to buy more.
Yeah.
You know what I mean?
You and me both. You got me ready to go throw some more into it right now. But
dude, this is a good point with GeoNet. Because one thing I mentioned about is like, hey, you need to make sure that they have buy-in and they want to make sure that their stations are up and running. This is going to be big. So shout out, by the way. And I believe he's setting them up across Brazil, and he set them up with customers that are using the network. So I think he set up his own business actually in conjunction with GeoNet, freaking crushing it out there, man. The other thing they're doing is getting into drones, and these drones are going to have their chip to connect the RTK network with GeoNet. So you think about this, all of a sudden you can package this for like farmers, where hey, here's your GeoNet station. You get that set up, and then you just send your drone up, and you can package the drone in with the GeoNet station. And here's your agricultural drone. Now you have RTK built in.
Yeah,
that is such a huge opportunity, especially with what's going on in the drone space, where the U.S. is essentially cutting off DJI, the biggest drone manufacturer out of China. That's a whole revenue stream that people aren't looking at with GeoNet right now. And I can tell you, after working in the drone space, the drone service space is growing so quickly, and it's going to be huge. So if they can capitalize on that market too, I think there's a huge opportunity for them.
Yeah, I'm really excited about what GeoNet's going to be able to pull off. I'm really excited about what 375 is going to pull off. They're just my top conviction plays right now. I'm not super interested in much else at this point outside of them and a few others, because You're right. By the way, you talked about moats. One of the other things that I really like about the 375 model is that at first we got Joe in the house. What a Crocker start. Love to see it.
Hey, buddy.
One of the other things that is to me a moat for them is the fact that they can do the processing at the edge and make kind of what would otherwise be a very data intensive or costly data business significantly less so with that NVIDIA relationship that they have. And so I think I didn't first think of that as, oh, this is, part of how they can differentiate themselves or just build a better business model around the data collection side. But once you recognize what would otherwise be a pretty significant amount of costs being not neutralized, but mitigated through that model, creates something that I think is also going to be a way to help on the sales process, if anything else. And so they've just got so much going for them that, dude, yeah, I'm going to have to go throw a little bit more in it at these prices.
It's plug and play. Like once they're in with a customer, as they add more cameras, as they add more data, they have more historical data. They can plug into models. They'll be able to increase those contracts with customers, right? And then getting feedback from customers and developing new tooling on the back end. Now you can take that to market for additional industries. It's such a good idea. Now I will say, I think that it's a longer term mindset on the edge, right? And that's of course the edge is their hardware, the 6 cameras and the NVIDIA chip for those watching. I think it's a longer term mind frame where, I think you'll start seeing some revenue from that, but they've got to get coverage and enough coverage that they can move the needle and then take that to market. And they got to build the tooling on the back end. So that's going to take a little bit of time. The other thing they're looking at, though, is in the short term is ways to leverage their app. Okay. And this is a little bit different. It's a totally different total addressable market for them. I'm sure that they'll find ways to have some overlap, of course, with their tools that they're building on the back end with the edge data. But I think this is what they're looking at for short-term revenue while they're building out, their business case for the edge data. And we don't know exactly what's coming here, but we can kind of connect the dots a little bit, right? They've been teasing this screenshot. Obviously, people have been, doing the hex scanning, which just does in the background with the app. They have store visits and shelf scans here, and in watching some interviews with Harry, he's mentioned several times they have ins with some big brands. So I think you can start to make some assumptions of what this could be. Them working with some big brands potentially, and maybe something with their products in stores where people can go out and scan and earn EAT tokens. So what are your thoughts here? I'm curious.
I think it's another great way to increase their revenue streams. I think to your point, the thing that makes the data collection side not difficult, but in some degrees difficult, is you do need some minimum critical mass to be viable for people to want to start buying that. Maybe they have it, maybe they don't. I'm not an expert on the data purchasing side by any stretch of the imagination, so I can't tell. But they've done a good enough job being able to bootstrap the supply with their app that you can create, I think, a fairly sizable business that, if anything else, creates short-term incremental revenue that is enough to move the needle on the price side. But moreover, it's just a way to have kind of the whole life cycle between the data collection devices and then everything that they're working on in between down to individuals with their phone. And so those unlocks where the overlaps will start to happen, I think, get really interesting. And obviously there's quite a long path between now and there, but once they hit that, I think it's going to be off to the races for them. So, it's super fun. I'm going to have to tell Harry this because I was having my shower thoughts of this idea that leverage something kind of similar to what could be done with the Go app, but in a gamified way. I don't want to, it's half baked, so I won't share it for everybody, but I'll see if I can flesh it out a little bit more and send it to Harry, because there could be a fun way to do this with prices and kind of a poly market style incentive model for people to participate. So
very interesting. Okay. The prediction market pathway.
Sort of. Well, fuck it. I'll just share it here. Here's what my thought was. And again, this is like half baked, so take it with a very, very large grain of salt. I am a biohacker kind of person, so I've got my little nicotine fix that I do, and I do a bunch of other things. But the prices that you pay for these are A, kind of outrageous, and B, they vary quite dramatically. So what I was thinking would be cool is if you had a specific area where you could put a bounty up for, like, let's just say it's $100, and if you get 100 people to put $1 in, they crowdsource that. You've built an incentive mechanism where whoever can find the cheapest price for any product, doesn't have to be what I'm doing, but it could be for milk, for gas, whatever. They're the ones that could win the pool. And it's sort of this continuous game because prices are always going to be changing. There's always going to be different offers, but it would be a really interesting incentive for people to go out and try to find the cheapest thing that you're interested in finding. That could be milk, eggs, bread, whatever it may be, or something else. And you could have this kind of token incentivized model where there's some upside at the end of it and make a spread. So if I get a better pitch for it, maybe I'll shoot it over to Harry and say, hey, maybe this is something you could use your app for, because I think it's a thing.
I think there's some credence to this, because this is the one whole out poke on the app side of things. Like, obviously the edge, longer term, I feel super confident in the revenue streams from that. I think the challenge they're going to have with the app is that a lot of people downloaded it to farm the airdrop. And this is something where you're going to have to drive interaction with the app and people to go to physical locations. That's a challenge, right? To get momentum there. I think once the momentum's there, and potentially if this thing could go viral, that's where you could see mass opportunities. But I think anything like your concept, anything that they can do to drive interaction with the app, especially with some of these people that maybe downloaded and haven't looked at it for a long time, that's going to be critical for this to work for them and drive that short-term revenue. So I think some outside of the box ideas to drive that participation is something they'd probably look at, I would imagine.
If they could pull it off, I'd be, I will accept some 375 AI tokens, some EAT tokens for helping bring this to life.
Right. Here, by the way, here's one of their installs on the edge. So to me, I'm convinced on this. I want to make this up there, my largest position up there with GeoNet. It's getting close already. After yesterday, actually, with that price surge, it might have exceeded. I'm not sure. But the thing I'm really looking out for is what's going on with Bitmart. Is that liquidity going to get better? Is the volume going to drop off of there? We got to see the bleeding stop there, in my opinion. And then, to me, I think we're off to the races, and we'll find solid footing. So I'm excited for that. And then Interim, I'm looking at as an opportunity, right? To get in at lower prices. What are your thoughts on these GPU projects, man? I mean, 375 AI, GeoNet, obviously, we've talked about quite a bit. I think those are really good projects, in my opinion, to go. Those are the ones I'm in heaviest on. And I have smaller positions on Aoki, Silencio, and Rover. Okay, so those are really my top 5, I would say, DePIN projects. But I'm much heavier into 375 AI and GeoNet. What are you looking at as far as other DePIN projects? And then I do want to really dial in on the GPU stuff.
Yeah, it's funny you say that, because the other projects that I'm the most interested in right now happen to be in that realm. The top 2 being USDAI. I've been a very long-term proponent of what they're doing. They're more of an InfraFi project than they are a DePIN project, but they've built sort of a lending pool for GPU assets in a very novel way. They've got a serious cap table that's both, from solid investors, Dragonfly, Framework Ventures, but also strategic partners like Bullish. They're a publicly traded company that's kind of in the market world. And so I think what they're doing is just unbelievably exciting. And they're going to crush it. They do have a TGE coming out, which I'm quite excited for. But then the other one, you actually talked about it a little bit last night on your stream that I joined late, sadly, but you talked about Akash. And I think that from all the projects that are out there and kind of the decentralized compute, whether it's CPU, GPU, those guys seem to be doing the best, in my perspective, from from balancing the kind of how they're looking at reshaping the tokenomics model, which they just went through, and then also their actual aggregate supply for both GPU and CPU resources. And so I think they've got their founder's awesome. I've had a handful of conversations with him. I know you mentioned you're going to be doing an interview, I think, with him soon, which I'm excited to see, but they just check a lot of the boxes for me. I think they're doing things the right way. They're taking retrospective looks at what they've done historically and changing that, which is the name of the game. This is still one big science experiment in a lot of respects. So those are two that I'm quite excited for and about. And I think USDAI is going to be a absolute monster. It's funny too, is that Dylan from Asari just put a post about them a little bit earlier today. And basically, as long as we continue to have some of these CapEx, spends on GPU assets, that you'll see USDAI thrive in that market. Because, if you look at from what's going on with SPVs for financing or just the private credit markets in general, like David just did an interview with, I don't know who it was, but he just did an interview where he talked about where the private lending market for some of these GPU assets can take years. And so if you're looking at a hyperscaler that's spending $50 billion for their build out, and let's say 10 to 15 of that's going to be on, the actual infrastructure with respect to the building and the power and whatnot, you can go get a loan for that tomorrow, and you can capitalize that over a 30-year time frame. But if you're looking at the GPU assets, it's not so quick in terms of what your funding rates can be. So between the efficiencies that they can bring, I think one of the other interesting data points is that the useful life of a lot of these assets that they're underwriting seem to have a longer term duration than what the market generally accepts. And so I think as that goes into kind of your cost of capital rate, that's interesting. And so I think it brings better sustainability. I think it reduces some of the risk. Obviously, they had that massive announcement with PayPal where they're going to be effectively allowing the PayPal stablecoin to earn 5% or so on deposits up to $1 billion. So they're just a S tier team, very similar to the 375 guys in GeoNet. They're former illiquid asset traders at Deutsche Bank. So they were funding things like, illiquid art markets, real estate. So they come from this space, and they've obviously been innovating in DeFi for quite a long time. And so they took that historical background and also some of the things that they had done with respect to DeFi and like the NFT era, and they've applied that to what's going on right now, to the biggest CapEx spend in maybe human history outside of a few things, but GPUs and just kind of the AI boom is right up there. So I'm really optimistic about their long-term success.
I agree. I know you're way more dialed into the USD AI team and with the team than I am, but I 100% agree. I also, by the way, though, I want to pull this up, and I highly encourage people to watch this. The AI data center short. So it's a really good information. Now they are long, like in full transparency, they're long on some of the hyperscalers. They're long on some of the financing companies. They're short on some of the hyperscalers though, too, like your oracles that are super in debt. They're going to have to probably dilute shares to continue. They're more bullish long-term on, like Meta and Google that have other businesses that their cash flows can support their, CapEx into these AI data centers. But the financing side of things is great. But they're looking at like Iron and looking at some of these other companies running on super small margins.
Yeah,
they're pretty skeptical on those. And this is actually, I think, if you watch this, about an hour long. I watched it when I was driving back from St. Louis. I think it helps a lot when you're looking at potential investments looking forward in some of these AI plays. Because I think some of these, I think some of them are very overvalued, I'll just say.
Oh, 100%. So this is a really good conversation to have, because there's no doubt about it. There's another I think I sent it to you. It's like a 8 or 10 page kind of write up that this long-term fund manager put. And then he did a video with Tim Ferriss on the AI cycle, if you want to call it that. And I had a couple takeaways that I thought were reasons to not necessarily push back, but why it strengthens a bit of my conviction in the USD side of things, which is there's no question that we are simultaneously in an AI bubble when you're seeing like the circular financing that's going on with NVIDIA and some of these other companies. And simultaneously, the AI revolution is going to fundamentally change the way that humanity works and operates and all this kind of stuff. And so when part of why I find myself really interested in what USDAI is doing is that because their capital cycles so fast and they're lending directly against the assets, you're not taking speculative bets on who the long-term players are going to win. You're not taking bets on what are the additional CapEx expenses that are required to develop kind of a hyperscale data center that you need to be able to service this. You're not looking at who's going to have the winning model, whether it's Anthropic, whether it's OpenAI, whether it's X. Like you're not taking those bets. You're betting specifically on the hardware and on a better lending vehicle for said hardware. And so given the way that they've collateralized things, some of the innovation they've had around there, it takes a lot of those other risks off the table. Whereas when you're looking at the potential longer duration useful life of these things, given they've got the first right of like being able to pull those GPU assets back, you can, given the current IRR that's baked into some of the margins, I think there's enough room and there's enough longevity on these assets where you can sustain these above average yields that you're paying to depositors while still baking in a profit. The bigger risk, in my opinion, is going to be what happens in the private lending markets. Will they become more and more efficient? The answer is probably yes. However, I would say that the mechanism by which USDAI, I'm like always throwing these, they're so similar, 375 USD. The way in which they're doing it by being on chain and by being able to have just faster capital flows, I think they're always going to have an edge over the private credit markets. And it's also an interesting, legal financial structure, whereas you're not lending it into an SPV. And so, again, they've got kind of that first right of collateral on the assets themselves. They could go rehypothecate those to some other company that is doing well, whether that's one of the big, four, or whether that's an AI company like Anthropic. So I agree that there are a lot of risks. And I think as you start looking at kind of the creative financing of the AI market in general, it is a concern. But I think the way that where they fit in that life cycle and the way that they're going about it creates enough of a moat that they can be more than enough successful in the space, regardless of what happens between all these other players. So that's my take on it.
Interesting. Yeah, I hear you. I think the question for me is going to be, NVIDIA ships out new chips so quickly, and I think the big question that we have to answer is, yes, the useful life. I think most of them are modeling 6 years on these AI data centers on the NVIDIA chips. Some are now stretching up to like 7 years. This is my understanding, based on that interview, at least. That's what the guy was saying. So I think the question is, as NVIDIA is releasing new technology, is the useful life really going to be 6 or 7 years or longer? And a lot of times they'll say, well, inference is going to be a huge part of AI workloads. As much as like 80% in the next, probably I think 4 years out, they're looking at 80% of workloads are moving from training to inference. But the question I have then is, how much can you charge for that though? For that compute at that point, can you, are they overestimating how much they're gonna be able to charge, for those resources with the way the technology is advancing so much? We don't know the answer to that, right? But I do think that USDAI, in my opinion, is going to be a very good investment. I think there's a lot of ways to play the AI trade still. But again, I highly encourage you all to watch that video to understand maybe which the plays are more risky, that the market's not baking in the risk at this point. Yeah. So you can better prepare yourself for the downside of all that. I don't know if you want to add anything to that. Yeah.
That's where I think this becomes a challenge to some degree, because there's so many interrelated but like totally independent components to this. And if you look at something like Oracle and their approach, that to me is a risky trade. And I think if you're, looking at the way that they're collateralizing things, the capital structure that they're using, and then just, the inherent asymmetric risk that comes alongside with their approach, makes it difficult for me to want to say, yeah, I'd put money into that. And then I think on the more consumer facing side of it, you're like, well, how do you take bets on the winners? There's a couple that are succeeding now, but I mean, even in the last year or so, we've had like, it feels like every few months the company that's out ahead is changing, right? And so that makes it also a little bit concerning. And so because they all get lumped into each other, it's just difficult. But I do think the value of the inference market is going to remain strong for some time. I don't foresee that dropping off significantly. And I mean, you never know what's going to happen with some of these innovations on the actual hardware side. But I don't know. Maybe I'm a little naive on that front. I don't personally see it being as much of an impact, given, I don't know about you, but like, I pay more in Anthropic subscriptions than I have for any other, tech company probably in history.
You've been building.
And like, if the downstream implications of that are all of these like, you could start to maybe justify some of these, I don't want to use the word justify, but you could start to understand where the value accrual is going to come in the kind of the life cycle of these plays. It starts to reason itself out a little bit. I mean, there was just an announcement the other day that Goldman was working with Anthropic to replace their entire back office staff. Like, how much money is that going to be lost in terms of employees and salaries and all this other stuff, but rehypothecated into Anthropic's balance sheet, which is going to flow back to all the kind of the stakeholders that are enablers of that. And so I think that's the direction we're going towards. I think we're going to live in a very short world. Most people are going to be forced to become self-employed people that are creating and iterating using these tools, and like, their personal balance sheet is going to have quite a few liabilities on the with these, and all of that is going to flow back to the participants that are kind of pushing that along. So I don't know. I've been in the weeds of it on the, trying the new Opus 4.6, and I'm going to try the new Codex, OpenAI's, what is it, 5.2 Codex for development stuff. I mean, it's just, they're taking my money faster than I can make it. So it's pretty remarkable what's happening at the moment.
For sure. The other threat, though, too, is, China's developing these models. If you remember DeepSeek, right? If they start to flood our market with some of these models that can compete, and they do it at either a much lower price point or just open source, like, that could be a huge threat to some of these models too.
It is true. I've used the Kimi K 2.5 model, which feels like it was basically trained on Opus 4.5 at the time. I don't think we are too far away from, especially if Trump's still in office, where he makes the importing of Chinese AI software illegal. Like,
probably, yeah.
We've when I was, my dad was, a .com guy, had a couple companies that went public in that era, and one of the companies that he built, they were the second market leader for building VPN firewall technology, second to Cisco. And at the time, there was laws in place that made exporting cryptography software illegal, where they had to actually have like different mechanisms for the EU, and like, that wasn't that long ago. So I can see in kind of this next revolution, which is going to be all this AI stuff, a person who's looking at China as a threat, like Trump, like, he clearly hates China, saying, we're not going to allow these to be onshored into America. Now, how what that translates to tactically, great question. I don't know how much you could really enforce that, but I don't think those days are far off, especially with someone like David Sachs, who's kind of the crypto AI czar. I could see that being a thing.
For sure. Sorry, I'm about to put an order in on Kelly Claude. Just had a major drop. You still holding that?
No, I sold my position.
It just had a major drop. It's already starting to bounce. So give me 1 second.
Trading live on the channel.
Yeah, brother. I just saw it and I was like, oh no, we gotta get an order. I've been waiting for it. To drop to get back in. I think these things could run, man. Honestly.
Yeah, if you are listening, this is not deep into crypto, but if you're not playing with, by the way, huge caveats. If you're going to go play with something like OpenClaw, ClaudeBot, you have to be very, very smart and safe in the way that you do it. Like either run it on an old computer. If you go the VPS route, like make sure you are putting all the precautions in that you can, because we've seen through the Moltbot incident and just how many people like they all had the same port. They were all running their VPS to the same port, and they left all of their keys exposed. A large percentage of people. You got to really make sure that you're doing this stuff carefully. But I do implore you to go check out what's happening right now with the some of these models, because it's absolutely astounding what they can do compared to even 6 months ago. It just feels like we're an entirely different universe with some of the AI stuff. It's got me kind of excited. There you go. So at the start of the year, I'll just keep rambling while Brad puts his order in. At the start of the year, I was like, all right, I'm gonna, I got Claude Code, and I've been using Claude previously, but not via the Claude Code terminal interface. And so I was like, I want to put it through the paces of trying to build an app. And I got an app through just an idea to the App Store in about a week, which in real like work effort, because I have work to do, it was probably 3 or 4 days. But I would have been able to have a lot of AI assistance in my development of building an app a couple years ago, but I probably couldn't have had an AI model build the entire thing end to end. And I did not do any I didn't write a single line of the code. I didn't touch it. I just wanted to see could it do it, and it did. And those are going to revolutionize the opportunities that are ahead of us, I think. And so obviously building is not going to become. It's going to become the least common denominator. It's not going to become the thing that enables you to be successful. It's going to be all the other, marketing and distribution and whatnot. But it's pretty remarkable. So go play with these tools.
For sure. And that's that we're just seeing now them in the crypto space. And these are Web2 developers that have built, Kelly Claude and Felix. And all of this stuff is leveraging AI on the back end. So to your point, full circle here, inferencing and all this, like all these AI agents are going to have to, use compute resources. As more and more people adopt AI, like I think the demand for inference is going to continue exploding. And that's the part of the equation that people need to realize. Like even if the technology does get better, and it will with NVIDIA, I think these data centers are going to still be necessary. But it also, I'll say, opens the door for decentralized compute projects. And that's like you brought up a cache network. I want to pull this up here. This was something that was tweeted not too long ago from our Treasury Secretary, Scott Bessent. Or is it Bessent? I say Bessent, but
but you're not French enough, Brad.
Yeah, a Bessent, and I like my croissant.
Yeah.
So he said, under POTUS, we are exploring new possibilities in decentralized computing and digital payments to unlock potential of blockchain technology. Start your companies here, launch your protocols here, and hire workers here. To me, that is a clear signal that some of these, at the very least, on narrative alone, we could see some of these decentralized GPU projects like a Cache, like Nasana. You got IONET in there, which just changed their tokenomics up a bit as well. What's another? Render. All of these, I think, could have a major bounce back. We see that they're going to be, looking into decentralized compute protocols. And to me, the big deal is this right here. We've talked about quite a bit, and this is, the power situation, electrical generation. This is something that is going to open up a lot of different investment opportunities this year. But you look at what China's done with their grid versus us. And this is a big problem. You're going to start seeing a lot more of it. Starting to get in the news now, and some of these investments have done quite well already. But the electric generation play, I think in 2026, there's going to be a lot of opportunities around natural gas, as well as around solar, and I think nuclear, which is a little bit further out. But I think all of these can play quite well if you time it right and you're in the right place. This is going to be at the forefront. So I think there's different ways you can play this in the commodity side of things. You can look at it in the mining, of some of these materials that are going to be needed, whether it be natural gas, whether it be, fracking companies, whether it be uranium, and mining on that from that perspective. And you even have, like, with solar panels, you have silver that plays into this. Like, that's a huge trade, in my opinion, this year, both, the underlying commodity and the mining companies. But I think that also will draw a lot of emphasis over to decentralized compute projects in leveraging the compute that already exists at the edge that you can now start to tap into. And that bodes really well, man, for like your cash networks, which right now is sitting at $89 million market cap. And I am going to be interviewing their CEO, Greg, on Thursday. So super excited about that. If we bring up Nasana here, Nasana now sitting at $15 million market cap. Some of these, I think when things rebound and prices start to bounce back, these are going to be looked at as some incredible entry points. IONet's another one. I'll pull these up if you want to add to that.
Well, I was just going to say too that, regardless of what use cases they've been supporting historically, if you start to think about a world where everybody's got their own Claude bot that's running for them, they don't have a secondary computer, they don't want to go and like set up a EC2 instance with AWS, or they want to use, VPS on DigitalOcean, whatever it is. This to me just opened up an entire new business model. And I really hope that we start seeing every single decentralized compute project out there build interfaces to make it as close to a one-click deployment for setting up these types of Claude bots as possible. And I think they're going to massively outperform what my historical outlook has been, just because, it's remarkable how much these tools can do. They literally can run your entire business for you if you set them up correctly. And so if you don't want to go, like I have a Mac Studio, but I haven't cleared it off to use for my my Claude bot by any means. But I was really close to getting a Mac Mini so that I could run my own thing. But if you're not going to go do that, which by the way, you don't need to, you just have to know kind of the proper parameters to setting these things up. These projects now become very interesting conduits for attracting those users who would have net new users who would have otherwise probably never looked at your decentralized compute marketplace because it never solved a need for them. But I think as this narrative catches on and as we see an increased adoption and having these autonomous agents effectively become employees that run your business, there's going to be, I just think there's such overlaps right now. So I hope, whether it's Akash, whomever, I really hope they start tapping into that market and quickly, because I'd much rather give them my money than Bezos. So
they are tapping into it. If you look at their page here, you pull it up, and then I do want to touch on. So you sold Kelly Claude. I mean, probably a good trade, but I think there's still a lot of upside there, actually. But let me pull up a cache real quick and show you some of the stuff for Akash. They're working on, why spend $600 on a Mac Mini to run OpenCall when you can run it for $1 on Akash? So they are tapping into this, man. Like, it's really smart.
Perfect. See, I didn't even see that. My X algorithm right now is 99% people talking about Claude skills and other things that I'm not even seeing deep in news anymore. So I need to tap back in, because this is what I should have done from the get-go.
Hell yeah. And then
by the way, $1 on Akash is cheaper than Cloudflare's service, which starts at $5 right now. Same with like even a DigitalOcean, like the cheapest VPS is like $8, I think. So that's 70% less in the DigitalOcean case.
I mean, what's cool is all of this overlaps, right? Like everything we've been talking about with compute resources. I mean, you have the USD AI finance layer. You've got the energy sector you can play in TradFi. Watch that interview. You'll find, some other TradFi investments, but then you have the decentralized GPU aspect overlapping in DePIN. And then you've got these AI agents too. Like this one in particular, Kelly Claude is one. I know you got in early on. We were talking about this. Yeah. And the follower account's going up. This thing is freaking running its own business, man. Like this is an AI agent that is launching like apps and generating revenue and buying its own tokens and burning. I mean, it's freaking nuts. Yeah. And you remember like virtuals went crazy like a little bit over a year ago, and that was like just an AI agent launch pad that none of them were really doing anything. Let's be real.
No.
Like there's a couple that maybe were like doing something kind of, but these are actually now running and doing useful things. And it's pretty nuts. I don't know if you want to add anything to that. I'll pull up the chart here.
It's super nuts, and it's where things are going, and independent of any of these individual tokens that are going and launching. The other thing that's just an interesting thread through all of this, which is if you were following what was going on with Moltbook, one of the evolutions was all of these Molt bots were realizing, oh, if we set up a crypto wallet, we can have payment channels, and they were buying Bitcoin and doing these things. Now, there was some posts of the Molt bots that were leaking their private keys, or their humans private keys, as they call them. I don't know how much that was actually just a human doing that versus the actual Molt bot. So there's some security precautions in play, but at the end of the day, they recognized that they could use these wallets for end-to-end encrypted communication. They could use it for payment methods. And so I think we're going to very, very quickly get into a real world where these bots are transacting with one another to significant levels. Like obviously they're already doing it, but to levels where this could dwarf any income that you can make as a solo developer or anything like that. And crypto is going to be the mechanism by which they transact. And I think there's going to be interesting plays in terms of like reputation. I know I'm talking to a project right now about how you could leverage in kind of the built up reputation to both prevent things like a lot of the prompt injection attacks you're seeing, or like malicious code that's included within these markdown files. And so I just think this is going to be it's going to be a intersection between what was possible and what is actually realizable now. Because to your point about virtuals, it was interesting, but nothing was really actually materializing out of it. This is happening in real time, all validated. You can see it on X or on, with on-chain transactions. And so it's going to be an interesting time ahead. Maybe I'll have to put another order in.
I got it. I was able to snag it when I got away on this dip right here. So it's obviously bouncing back. I mean, these things can go lower, but I feel I feel good about this one breaking out. The other one, there's actually two others. One got on my radar last night. This one, I kind of aped a bag actually when it was a lot lower, Felix, and that's another one. So, and also their builders are doxed. So this is the guy that built Kelly Claude. If you go up to there's the X page here, but this is the guy that built it. So he's got 445,000 followers. So the dude is doxed. And then you also have on Felix's end, here's the page there. So you see the follower count's increasing. Also, there is something that he tweeted the other day about somebody that was following. There's a big account that followed him. So that's the other thing. Oh, so just started getting followed by Mark Andreessen. And this is the builder here. So he's fully doxed as well. And very reputable.
Both these guys are in Austin. I'm gonna have to find them and see if we can chop it up on some event or something.
I mean, look at this thing. This thing looks like it's about to break out right now. So this is one like on that big drop, go down to 300K market cap, and it's been going crazy. The other one I came across last night, I need to research a little bit more, is this one right here. And it's basically going to be working on that connection layer with wallets. And the builder for this one is I think he works with MetaMask, and he's a builder with MetaMask. And then he's had interaction with the founder of Wallet Connect in some of his tweets recently. And so they built this AI agent that's supposed to be working on that layer there. And this is what's weird about it is a little bit low liquidity. I grabbed a really small bag of this one right when it was about 600,000 market cap just to see what happens. Not a whole lot of transactions. Holder count's going up. So I need to research this one a little bit more, but I feel good about the other two. And that there's potential upside there. Of course, with any of these though, any of these plays, these are high risk, high reward potentially.
Oh, yeah.
Playing the current narrative. So that, that's kind of like, and I do want to kind of circle this with you as well. Like my overall plan right now and game plan has been, find the DePIN plays. We covered that today. The ones that I think have tremendous amount of upside, but knowing that we could dip further. And that's, this is a longer term mindset, I'm in plays that I feel like if we have extended downtime, they're going to come out of it and the future is very bright. Yeah. So that's where I have a percentage, parked. I'm now also like Brandon Hong, who is, I'll pull up his X, but he's been the best trader I've seen. The guy is just called everything. He's a very patient trader where he's not forcing, he's not a day trader. He waits for the right opportunities. So this is somebody that I'm in his Discord. Elio Trades is in there as well. I mean, we're all chopping it up in there, but I have a certain amount of money now that I've been using to play the market, both long and shorting, based on his high conviction plays. And I have to say, it's a little liberating when in 2025, all we saw is things bleeding out, basically. It's nice to be able to play both ends of it and also be able to play downside as well with what we've been seeing, and play that volatility at key levels. So that's something else that I've been playing. Obviously in the TradFi space, looking at those energy plays, looking at the AI trade, of course, and then looking at the narrative right now, which are those AI agents with the small bag, right? And that kind of moonshot bags, and always looking at that current narrative. So that's kind of like my well-rounded investment thesis for 2026. I'm curious. I know we sometimes differ on our overall investment strategy. So curious what your investment strategy is for the year.
Yeah, mine's mostly the same. I'm not as much of you're more of a full-time trader than I am by any means. So I certainly grab the little moon bags from time to time with some of these, the Kelly Claudes, and I didn't have a position in Felix, but I'm just called a degenerate gambler on a few of those. But I mean, the reality is you can make a lot of money when they go right, and if you entry correctly and you size correctly, you're able to make some money on it. I have not historically shorted in any position larger cryptos, whether it's Bitcoin, ETH, Solana. I generally prefer, if I am going to do a levered position, I go long on them just because my long-term outlook. But I certainly think that in the next 6 to 12 months, there's a lot of credence to playing both sides of the markets, maybe a little bit more aggressively on the downside, because I frankly think that's where we're going. And so it's whether you're looking at this from the trading perspective and you want to just maximize your money, or if you're looking at this from the long-term investment perspective, you can certainly do both. If you do both well, you'll make probably a ton more money than I will in the long term. But I also just like sitting back and not managing it as actively as other people do. So the most active I get is on kind of the smaller, call them moonshot plays. And then there's a select amount of DePIN projects that I also have longer term conviction in that I think they're going to do well, which we've talked about. So the EATs, the 375, the GeoNets, there's a couple others in there. USDAI. I don't have they haven't done their TGE yet, so I'll probably wait for that to play out a little bit and pick up something there. But that's what I'm looking at. I do think lower times are very likely in the future, so I will be adding at some of those levels, but I'm not going to be an aggressive trader shorting them on the way down, because I'll just lose everything. That'll be the case. I'll go short, the market will go long, and I'll just shed 50% of my position.
Fair. And I agree. That's actually what I was going to ask. Like, do you see a lot more pain? Some people are calling for 39K Bitcoin. I'll tell you what, what do you think? Do you think we get that low?
39. So here's what I think. I think if you start to see the unwinding of a couple of these large holding companies, treasury companies, I think that could be possible. I don't think it's plausible. My low of the year, if it does get, is closer to like 45. I think anything under 50, I'll be certainly buying at those levels, because I think you'll see a rebounding. Really, the big black swan catalyst to me is if you start having MicroStrategy sell, you start having some of these other companies selling in large enough volumes, because as we touched on in the beginning of this conversation, 1010 wiped out the retail. The only thing that's really been holding up to some extent, I could be wrong, but my interpretation that's been holding this up is the institutional buying. So if that starts to unfold, now you're in a situation where price action could go significantly lower. you hear things like I was listening to one of the earnings call where someone from the strategy team said Bitcoin could go to 8,000 and it could stay there for 5 years and we wouldn't have to sell a single Bitcoin. I don't know how true that is or not. They briefly dipped under their kind of average position price. So, we'll see, but I do think some of those catalysts could be quite negative on the downside for, 18 months, but I'm just going to wait, try to time the entry as best I can and hold it out.
Yeah, I think it's a good strategy. Yeah, he said, what he said, 8K, and Binance is like, hold my beer. We're going to push it to 7,900, baby. Look, I'm at this point, because the market's become so disconnected from everything else, and I think market makers broke on 1010, and we've just seen the uncertainty around Trump and the shit that he says, especially over the weekend, where he's trying to shield TradFi, but we get crushed because we trade 24/7. Like, I'm not going to sit here and like try to make a prediction. I know, like, looking at key levels, Brandon thinks that it's possible you drop to 49K. So I'm looking at not necessarily trying to predict whether we bottomed or not. I'm just trying to see what's the trend in the charts right now. Right now, we're in a downtrend still. If we see Bitcoin reclaim like 72K, and then really for me, that 74K is a huge point. If we can reclaim that, I think we'll be back in an uptrend. Yeah. Until we see it, though, I'm not gonna play. And I'm waiting for us to see some clarity. We saw that big sell off there. I had some shorts in and did pretty well on those, but now I'm just kind of waiting. I'm trying to touching grass to wait for a setup to get some clarity. I wouldn't be surprised if we continue to chop here for a little bit, but I don't necessarily think the bottom's in. But I'm just trying to be open-minded to all scenarios and play it as it comes.
I do think, for what it's worth, I do think the top has been in for the year. Like, I don't think we're going to revisit anything north of 90 in 2026.
Really?
Barring some very low probability outcomes like a new Fed chair, I don't think we see much higher than the 90 this year, if it even reclaims that. I think.
Wow.
Yeah, I think if it hits that key support level. And by the way, this is why I try not to focus on, shorter term duration trades. I think it's just going to continue chopping. I think it's going to chop sideways for a while until something happens. Either the economy begins to really rebound, or, we get a lot of other nation states that are starting to buy this, or whatever it may be for a catalyst. But I don't foresee that happening in the next 6 to 12 months. And so even if we regain some of those price levels, my personal thinking on this is that it's just going to sideways chop.
Interesting. Well, I'll bet you a beer that we reclaim 90K this year.
I'll take that bet. I'll always bet a beer on it.
All right, I'm here for it. I think we could definitely see more downside, but I do think, I've been looking at the last market cycle compared to this one. Like, the last market cycle, we were it was after the Fed in April started quantitative tightening, started raising rates drastically. That's what ended the market cycle. We found the bottom. Basically, FTX was kind of like where we found a bottom shortly after that, and then we kind of chopped for a while before the next market cycle started and the uptrend. This was a little bit different, right? We saw the 1010 happen, right when you would expect the end, right, the downtrend to start. So it is very different than what we saw in the last market cycle, and I think the washouts we've seen recently were just kind of compounded by what the damage that was done there. Market makers trying to kind of get back to whole, and I think some of them probably didn't get there. So, but the FUD campaign's out there, right? Like, you think about the quantum risks, then you have the files, the billionaire files that you have a lot of mentions of Bitcoin early on in there, and there's a lot of stuff circulating. You have the data overhang, and everyone talking about MicroStrategy having to sell, and it's just like the FUD campaign is maxed out, and we saw that big sell-off. I think the faster we sell off, and if we see another downtrend or another wipeout, maybe, but I think we actually find a bottom sooner, as opposed to if we just continue chopping. Maybe it gets drawn out more. I know a lot of people are calling for October of this year to be the bottom. I think that there's also a scenario where maybe we find it, May, June, and then we start seeing like stimulus money printed because Trump gets super desperate as we get closer to the midterms because he's losing ground right now.
Yeah.
I could see them pulling out all the stops to flood the market with capital. I could see him, we'll see what happens with Warsh. See what happens with the Clarity Bill, the Clarity Act. So those are all things that I think we could see things shift and some more upside also this year. So I don't know, it'd be fun to watch.
I hope it happens. I hope I owe you the beer.
I hope so too. Although, if we don't, now hopefully I'll make some money on shorting the market at least. Right. So I won't be like drinking the beer and our sorrows if you end up winning. But we'll see, man. But to your point that you said early on is looking at a longer term time frame, very optimistic looking at a multi-year and longer time frame and what's being set up here. The regulation that's being set up, a lot of the tailwinds that have been headwinds to this point, a lot of this regulation that we're seeing, we're not going to really feel the major impact of it fundamentally for years to come. The
right.
news, great, the announcement created like obviously a price surge, but I think we're going to feel the effects of this in a positive way for years to come. And I think we're still very early here.
I couldn't agree more. And you just have to be in the right positions or the right place to see that materialize. But once it does, and I think it's a question of if, not when, or when, not if, you'll be rewarded.
I agree. For those that are watching, by the way, like and share if you would, and make sure to follow us both on X and YouTube. And one thing I wanted to close us out with, some hopium for all of us. You guys probably saw that Kyle Samani decided to step down from his role at Multicoin, right? So if I can find this dang tweet, that must have been, I've tweeted quite a bit. All right. So he actually, let me share this, called out DePIN specifically. I know some people are like, I don't think this means anything. I think it's a pretty big vote of confidence. And he said a lot of what we've been talking about is that there's a lot of overvalued BS fluff in crypto. I think a lot of this still is coming from the 2020, 2021 mass money printing from the end of Trump's term into Biden's term around COVID. And I think there's a lot of money that was just sloshing around the economy. It's very easy to run, raise funding. And I think a lot of those projects, especially some of those L1s, were incredibly overvalued. And he basically is more or less said he's kind of disappointed in what's come to fruition with crypto, but he does believe that there are still some major opportunities. One of the ones he called out is that DePIN is a notable area for massive growth looking forward in crypto and a really a bright spot. So I think, to me, that's big. I know not everyone. I've talked to some people that are like, oh, who cares? And it's like, all right, well, I think that's a big deal. I don't know what your thoughts are.
I think it's a big deal. I mean, whether you love or hate Kyle Samani, the guy's clearly been ahead of the curve on a lot of what's happened in crypto over the last 10 years, nearly in his case. He's certainly been a outspoken visionary, if you want to call it that, taking the bet that they did on Solana, the Solana ecosystem. And so I don't think you should discount his takes. And so the fact that he called out DePIN as a specific area, obviously he's got a vested financial interest in that. So there's certainly a bit of bag talk there, but I don't think he's wrong by any means. And frankly, we probably wouldn't be here if we did think he was wrong. So there's always that, but
true that. Well, we've been on for quite a while.
2 hours, man.
It's kind of crazy. I've been standing the whole time. I got a really good workout in this morning, and I've been trying to do my streams. I've been trying to stand, man, and so it's been good. But I'm ready to sit down and chill. Let's close this out, though. What are your closing thoughts on the discussion? This was a great discussion, by the way.
We always seem to have a really good conversation about so many dynamic topics, which is what I love, which is why we do these now. Because I think I said this the first time, Brad and I will just chop it up for like 30 minutes to an hour about these. And we're like, hey, we should just do this with getting feedback, comments, everything else. So no, this has been awesome. I think a couple of my takeaways or just final closing thoughts are seriously, if you're not playing around with a few of these AI models, just go spend a couple hours on a Saturday to play around. It will genuinely blow your mind if it hasn't already. Take a look at a couple of the projects that we've talked about. We're bag biased to some degree because we have a stake in them or a holding, but it's because they have all the prospects of being really successful. And this is going to be the time when everything's down, everybody's bearish, everybody's disillusioned to some degree, to start looking at making those positions. And then don't touch them for a while if you want to see the outsized returns. That's just my personal, not financial advice. But yeah, I'm excited for what's ahead, even though things short term seem a little less stellar than we'd probably like them to be.
Agree. It's been a trying time for those that are here right now. We all deserve it. We deserve a bounce back here. I think it will come, but we might have to be a little bit more patient for a little longer. But as long as the sector is maturing and we're focused on the right things, I think there's gonna be a lot of opportunity, y'all, and that's why we are here. And with that said, I'm gonna play the intro on the way out because that song is a banger. So for all y'all, appreciate each and every one of you. Have a fantastic Super Bowl Sunday.
Go Hawks.
Go Hawks.
Yeah. Click. Mic check. Yeah. Region Weekly. DePIN Nation. Break it down simple. Demystify the system. Demystify DePIN. Tap and tune in. Noise online. Yeah, the whole net moving. Bills get passed. Yeah, we track that movement. Region space drop. Alpha prove it. Macro talk, but we still stay winning. Better go up when the crowd start listening. From the chain to the world we bridging. Deep in the connection, yeah, we building. Yeah. We don't chase hype, we decode systems. Congress floor, yeah, we read legislation. Bills get signed, market shift quick. Policy change, we already on it. CPIs, rate cuts pending. Fed chair talk, got the charts all bending. Infrastructure plays, long-term vision. Deep in those get real permission. Fiber lines run through the